So we're going to look at a fairly basic question for introducing club accounts and how to do club accounts. So here you're asked for accumulated fund, income expenditure, and to do an income expenditure, because this club has a bar, because it's bar sales, bar purchases and stock, we'll have to do a bar trading account. So that's the third document, and then the fourth document, the balance sheet. So start off with, where do we get the information from for the opening accumulated fund? So we start at the beginning of the question, the top part of the question here. That's the information for the opening accumulated fund. The only extra thing that has to go in there is we need to put in a bank balance figure. Okay, so these are the assets and liabilities at the beginning. So we're clubhouse and pitch. And that is 380. So we're going to add all these in the middle column and have to put the total in the right hand column. So clubhouse, we have bar stock is 4 grand. Equipment 26 grand. Bar creditors, so this is money that we owe to our suppliers, so that is 960. Equipment bar creditors, subs due. Okay, so that is money owed to the club, so that's an asset. Whereas the creditor is money owed by the club to somebody else, so that's a liability. So we have subs due. So some of the members owe us money from at the beginning of the year. Expenses prepaid, so that means bills we paid for in advance, so we're owed the service back, whether it be lighting or insurance, whatever, we're owed that service back from those people, so we, the club, are owed money, so that's expenses. If those expenses were due, then there'd be a liability. So now what we do is we add up all of our we're going to be adding up all of our assets and our liabilities. The only thing that we have to put in as extra is down here. We've got the bank balance. Now this bank balance is on the debit side, which means we have money in the bank. If the bank balance was on the credit side, it means we owe money, which would be a liability, a bank overdraft. So we have 23,800, and that's bank. Now we can add everything up. So that adds all of our assets, and we'll be taking away from that all of our liabilities. In this case, there's only one liability, the 960. Subtract the two of them, and that gives us our opening accumulated fund. Now that opening accumulated fund, I'm just going to copy that number. That number goes down the bottom of our balance sheet, because that's all the money that was invested. Oh, that didn't work. That's all the money that was spent are put into the club over the years by the people who are the members. That's the opening accumulated fund. Okay, continue. So that's the first part. Now the income expenditure. I already said in the introductory video that if we have a shop or a bar or some other activity, we'll need to work out its profit, and we'll need to do a trading account to do that. The main money coming in will come in from subs. Okay, subscriptions is the main amount of money, the main name for money coming into a club. But also we may have other activities. We may get money from sponsorships or donations. There may be other incomes that we get. But subs will be the number one. And if we have an activity like a bar, whatever work goes on in the bar and profit it makes becomes another source of income for the club. So I'm going to do the bar trading account first, and then put the number in for bar profit. So our bar saves, we need to start off with our bar sales. So bar sales is 65 grand. Now then we're looking for opening bar stocks. That's the beginning of the question. So bar stock at the 1st of the 1st 2011 was 4 grand. That's opening bar stock. Bar purchases. So bar purchases 32 grand. Now one thing that we have to see, and this is what we would normally do, we'll add our bar purchases, and that gives us our goods available. Okay, but here we have with our creditors, with our purchases, we also have creditors, which means there is of that 32 grand, so I spent or wrote checks for 32 grand to pay for stuff for the bar. But some of the stuff that I paid for was not to do with this year, 2011, it was to do with last year. And those are these bar creditors we had at the beginning of the question. So I'm going to need to adjust that 32 grand. I need to change it. So I'm going to put my 32 grand here, and I need to do my adjustments here. So I'm going to take away the creditors, so bar creditors, on the 1st of 1st. So this is the bar creditors at the beginning of the year. Now we read to the bottom of the question. Are there any creditors at the end of the year? Yes, there are. So there are bar creditors of 670. Okay, so sorry, we had 960 here. And that's going to be taken away because it's of the 32 grand. Some of it was for last year, so we're taking away that. Now, the bar creditors that we have at the end of the year, this is stuff that we bought, we haven't paid for yet, so we owe that money, so we're going to have to add that on because it's an extra purchase that we haven't actually paid for yet. And that, I'm just putting the 31st of 12, so that's the closing bar creditors. So we'll add all those together, and that gives us the real amount of our purchase. What we, even though we haven't paid for some of it yet, it's the real amount we've used up in goods that we've bought for the bar. So now we can add our opening stock and our bar purchases, the real purchases, and we'll take away our closing stock. So down the bottom it says closing stock is 3,200. Okay, and that 3,200 is going to be a current asset in our balance sheet. So 3,200, I'm just putting it in there while I am handling it. Now, back up to my bar trading account. So now I'll take my goods available and closing stock away. And then that gives us the cost of goods sold, which I'll subtract from my bar sales to get my bar profit. So you got bar sales minus cost of goods sold, so there gives you a bar profit 32,490. Okay, that 32,490, I can now copy that and I can paste that into my bar profit up here. So whatever bar profit I've worked out already, and I'm going to be adding all these in the middle column when I come to my income and expenditures. If I need to adjust any of them, I'll move one column to the left, I'll do my adjustment there, and I'll put the real number in here. Now my subs, I'll have to do that with subs, because it says subs is 49. Okay, so that's the amount of money that we've received. But of that, there were some subs that were due for last year. So that's 300, so I'm going to take that away. And then at the end of it, there are subs due for this year. So I'm going to add subs due. So that means that at the end of the year, I know I received 49, but there was extra money I should have received, which hasn't come in yet, but that will come in, so I'm adding that into subs. So now the real figure then for subs is the figure that goes in the middle column, and this is why I moved one column out to the left to do my adjustment here, so I get the real figure for subs of 48. Now, for the rest of my incomes and expenditures, I'm generally looking here in receipts and payments, because this here, this middle part, is a cash account, basically. Shows money flowing in, money flowing out, that's it. So, I've dealt with bank balance already. Now interest, so we got money from interest, so that's another income. Bar sales I've dealt with, I put that into my bar trading account, 65 grand there. Dance receipts, and I see I've got a dance cost as well. So what I'm going to do is I'm going to put those two together to work out the profit on our dance. Okay, did we earn money from running a dance? In this case, we can see the receipts are more than the costs, so we did make a profit when we ran our dance. So I'm going to put dance receipts. And then, I almost learned how to spell. And then dance costs. I'll take the two of those away, and that will give me my profit on running the dance. So, dance receipts is 6.1. Dance costs is 3.4. So I'll subtract the two of those. So that'll give me the profit on my dance of 2.7. And I see I have no other incomes. We've dealt with the rest of the incomes. Now move on to my expenditures. So I've dealt with bar purchases. I've got general expenses. Okay, so that's one of my expenses. Now, 24,150 now. I just need to see, are there any adjustments? Oh yeah, there's expenses prepaid at the beginning. Are there any expenses prepaid at the end? No, there isn't. Okay, so the expenses prepaid. So that means last year we received money for expenses that we used up this year. So we'll have to add, because we've used them up this year, we'll add our expenses prepaid at the first of the first, okay, at the beginning of the year. So that's 140. So it's paid last year, but we've used it this year, so we have to charge it to this year's accounts. So we'll add those two numbers together. Now, just getting back to bar purchases, why am I not putting bar purchases in here as an expense? Well, it's because I've already handled bar purchases in here when I was trying to calculate my bar profit. Okay, so that's why it doesn't go in. Any number I've already handled doesn't go in for a second time. Dance costs, again, I've already dealt with. I put that up there as a minus in the incomes. Purchase of equipment, well, that's not an expense. That's an asset. Okay, so that's going to go on my balance sheet. And I might as well put that in there now while I see it. So I got 15 grand of equipment that I bought, plus I had 26 grand of equipment at the beginning. So that means I've 41 grand of equipment. 41 for equipment. Okay. So that doesn't go in as an expense because it's not a regular bill. It's a once-off thing that we spend money on. Okay, so that we see though down here, equipment is going to have to be depreciated, and we're going to have to depreciate Clubhouse and pitch. So there's two other expenses we need to deal with here. So okay, so depreciation of equipment, it says equipment owned at the end is 20% of cost. So the equipment we just said a second ago is 41 grand. So 20% of 41 grand is going to be our expense. So 41 times 0.2. So that's the depreciation of equipment. And that 82, I'm going to put it in here. So that means my net book value on my balance sheet is that number there. Back up to depreciation of Clubhouse. So Clubhouse at the beginning was 380. We didn't buy any Clubhouse or sell any bits of it, so we still have 380. And it says that the Clubhouse to be depreciated 2% of cost. So it means down here I'll have 380, and my depreciation is going to be that times 0.02. So 760 is the figure that will go up here for depreciation. So now, I can now add up all of my incomes. You know, as I've done before, I would say to you, don't do this until the very end. I'm doing it as I go through it. Don't do your maths until the very end, because you may not necessarily have enough time, so just be aware of that, okay? Sales, yeah. Okay. Dance receipts, yeah, I'm just checking my numbers here. Grand, okay. So now I've got my bar trading account, and yeah, okay, so I move on to my balance sheet here. So I'm just finishing off. So this number here was Clubhouse. I just realized I put the wrong number in there. So that should be 380, not 38. So that means that should be 7,600. So I made a mistake then with my expenses, so I need to go and adjust those. Oh, and I made another mistake there. So general expenses prepaid should be that plus that. Yeah. Okay. Right, so my surplus of 100 then is the number that I have down there. Yeah, no problem. So my balance sheet, now fixed assets we've dealt with. Current assets, now I'm looking for things like these adjustments here, and I need to sort out the bank figure that we have at the end. Now it says balance 31st of 12th, 25, 480. That's a balance CD in a typical cash account. So it means the balance brought down being the debit side, which means it's an asset. So we have money in the bank. We don't owe money. So 25,450. So that's bank. Then we're looking at these. We have the bar stock. I put that in when I was doing it earlier on. We've done the depreciations. They've been put into our balance sheet there. Remember, all these adjustments, like in a trade and profit and loss question, they go somewhere twice in our answer. So we've dealt with those. We put those two as expenses, and we put them in our balance sheet. Bar creditors is 670, so that's going to be a current liability. 670. And we've got subs due, so that's money due to the club of 200. Okay, so we can add all these together now. So there's our current assets. We only have one current liability, so we can subtract our current assets and our current liabilities. That gives us our working capital, and we'll add the total of our fixed assets, so our equipment and our clubhouse. We add that to our working capital, and that gives us our net assets. If we move down then to our financed by, we'll add our opening accumulated fund and our surplus, and that gives us our closing accumulated fund and our balance sheet balances. And again, as you've seen in other questions, if it turns out it doesn't balance, you spend 1 minute on it looking to see if you forget something or leave something out. Otherwise, just leave it and move on. You won't have time in the exam to fix it. So I hope that helps.